Hey, good afternoon, everyone. I had a rude shock this morning when I woke up and I received news that Israel has launched an airstrike on Iran. And so I've decided to create a very short video on how to think about global events like a conflict in the Middle East. Okay, so a summary of the news of what we've received so far. Israel has launched an airstrike on Iran. They've targeted nuclear facilities and missile factories. And the commander of the Iranian Revolutionary Guards, Hossein Salami, has been killed, right? So, how do we think about the performance of our local stock market in a situation like this when we've just received the news and we do not know what is going to happen next? All right. Israel has said that this is just the beginning, and analysts believe that the Iranians will strike back. And even if you don't strike back, I think there will be a lot of political pressure for Iranian authorities to respond. Okay, so this is what we know. All right. Okay, so what's happening right now is actually fairly predictable. Stocks, including the Straits Times Index, are dropping, with commodities like oil and gold rising at the moment. And later tonight, I expect US investors to suffer a little bit as technology stocks, AI counters, they will drop quite drastically because generally speaking, tech counters, the betas are high, right? Which means that when Singapore stocks drop by a certain amount, US stocks will drop by a larger number. This is something expected. It's happening right now, real time, but it is uncontroversial. Okay, and this is often the case where you have violence in the Middle East. Now, what do the numbers predict about what's going to happen next over the next maybe 3 to 5 weeks? All right, so to do that, once again, I crunch my numbers and I look at the STI performance for the past 10 years. And the useful number I want to point out at this arrow, this number known as the annual skew. Local stock markets have a negative skew. This means that when something happens, crashes in the local markets is very large, can be very shocking, can be very scary, like what happened after Liberation Day. But recovery is very steady and slow. Okay, but the good news is that annual return will be positive over the long run. So generally speaking, even if recovery is steady but slow, you can expect an extended period of recovery after the crash. Okay, and actually the numbers, the graph actually proves it to you. In 2020, you will see the crash arising from COVID. It is almost a V-shaped kind of recovery. And more recently, you will see another crash that is a V-shaped recovery for Liberation Day. Okay, so this is just an idea of how local investors react to the news. Okay, now what does this mean if you have a cash hoard after the crash today and maybe over the next few days? You can slowly deploy your money into the stock markets, but you don't need to do it immediately or in one go. You could gradually just deploy it as the market recovers over the next 4 to 5 weeks. Okay. Along the way, dividends will keep coming, so expect the dividends in June to be relatively safe. In fact, I think dividends will keep coming all the way until August and September. Okay, so don't need to panic. The key question that we need to ask ourselves when these things happen is, over the longer term, will inflation spike, right? So if oil prices rise, the cost of living is going to be higher because we need gasoline, right, to power our transport vehicles. And as inflation spikes, the Federal Reserve in the US might be unable to lower interest rates as quickly. They might even have to raise rates later. I think this is more or less the real fear in Singapore, given that we are quite far away from the Middle East. Okay, and the best way that a local investor can react is to be immunized from interest rate changes. How do we do that? How do we make sure that when interest rates change, our portfolios more or less maintain its value? So one way of doing this is to balance out our allocation between banks and real estate investment trusts. Because when interest rates rise, banks tend to do well, and REITs tend to underperform, and then vice versa when rates begin to fall. Okay, so if we keep our money very safely between these two high dividend components, banks and REITs, right, this issue of the war happening in the Middle East will not affect us all that badly. Okay, that's all I'm trying to say. Okay, all right, so that's all I have. Okay, we're still waiting for the event to unfold. Maybe over the next few weeks, I'll be creating more content about this war. All right, if you like my content, subscribe to my channel. You can buy me a coffee here. If you want to listen to my life story, I have a preview that's always coming up soon. You can click the link and show up for a 1.5 hour talk, right, where I can give you more information of what actually I do. All right. So with that, thank you very much, and I'll catch you for the next video over the weekend.